Hello, founders and investors. Welcome back to Next Round Ready. I'm your host, Chris. Today we have special guest Paul Anthony Claxton from Digerati Investments. Paul, welcome to the show.
Thank you for having me.
Man, I'm excited for this conversation because I always love to talk to investors who I think are doing things differently, taking a different approach to the investment world. So let me ask you this. I'm kind of switching this up too. Do you like what you do? Like, do you enjoy being an investor?
Absolutely. I thought I was born to do this.
Really? Oh, okay. That's interesting. What makes you feel that way?
Um, you know, I like the how do I say it's very it's very challenging to be an investor. Um, but it's almost kind of like um you're literally the creator of your own destiny in so many ways. And you're the creator of other people's destinies as well. You're the facilitator of that, right? And so it's creation for creation's sake, literally. It's that's what investing is. And you're literally like nurturing new ideas into to products that could literally change our world, that could go down in the history books, like that people could talk about for decades or for hundreds of years from now. So I mean, to me, that's what investing is. It's give it a much longer rope than what people would traditionally give it when they think of investing. And so, I think, I was put on this earth to do something special. And well, I don't play sports, and I don't do anything like that, or I can't sing. So I figured, why not try my hand at investing? And I think I think it's something that just comes natural to me.
That's such an interesting way of putting it because I find that the best investors have that kind of belief of like, I'm here to do this because the way I explain to my family, I tell my mom what I'm doing now. I try to explain it like, well, I help people that are changing the world because the founders who get capital go and create companies. Those companies create jobs. And when the money is made, when all these companies grow, the economies grow and they evolve and all these different changes happen. Now, there could be some displacement with people losing jobs because of evolution, but I think that all
Hmm.
will correct itself in time. I just love working in this space because of how impactful you can be. Like helping one founder could literally be helping thousands and millions of people that you will never meet that they'll never you won't even exist to them. And I kind of love that part, of having that extensive reach of like being that helpful and that useful, kind of multiplying yourself.
Definitely.
So for you, how did you get here to this point of being an investor? I'm pretty sure the journey was not a straight line.
Yeah. Um, I think it all starts from when I was a child, and everything is kind of retroactively lessened, so to speak. And I look at things in hindsight, which, I look at how I was when I was a kid, and I was the naturally curious and mischievous, but I wasn't out like selling, lemonade at stands, or, I wasn't that type of inventive, but I was inventive like in a way that was mischievous. Like I forged my report card. I had my parents and my teachers fooled for like a year and a half in high school, right? That I was making B's and not F's, and I was turning my F's into B's and my D's into B's, and so I was innovative in all the wrong ways, I guess you could say, and that's why I kind of feel like I was born to do this as an investor, to be a VC. And so I think growing up as a child, and then kind of taking on challenges that felt natural to me. So like I did varsity sports in high school, et cetera, et cetera. But I always kind of pushed myself into directions that felt natural to me. So like I tried running track and playing football, and it just wasn't a fit for me. But as soon as I got into powerlifting, it hit me like right away, like this is great. And then I started winning all these powerlifting championships and whatnot, right? I wrestled in high school and ran cross country. It's all about kind of like I just figured out what was a fit for me, and I just kind of rolled with the tide of life, so to speak. It's like swimming against. It's trying to swim back to the shore when you're stuck out in the ocean. Like you don't swim, you let the tide carry you, back to the shore, and you don't fight it. And so, that like not fighting it, but not kind of like forcing my plan on life, but letting life just kind of happen to me, and then adjusting as I went along, and figuring things out as I went along, and then I joined the Marine Corps, and that taught me a lot about myself. But it taught me that, the discipline, which is what I really needed in entrepreneurship and venture capital, right? It gave me that discipline and the ability to create structure from chaos, right? So taking kind of that curiosity from when I was a kid, and then just that discipline that the Marine Corps gave me, and leaving the Marine Corps, I kind of, just followed as opportunities fell into my lap. I'm like, how does this feel if, and I tried out for a little bit. I did a lot of different things in the corporate sector for several years, from project management to 100% commission sales to staffing, recruiting. I did a lot, and I figured out what worked for me and what felt natural for me. And eventually I got referred in to work for a VC firm, right? And the mission felt natural. I built a mission and a purpose around why do I want to be in venture capital? And once again, it all felt, very much a part of me. And that's kind of how I got here, I didn't go seeking to be a venture capitalist. It just found its way to me, and I tried it out, and I was like, this is a good fit for me.
Wow. And so before you got to this point of being an investor, did you have any preconceived notions about investors, or did you just come in like, well, I'm open to learning everything I can learn?
Both. So preconceived notion that investors were just made of money. That's
Yeah.
that's what I thought. I thought,
Everybody thinks that.
I thought VCs were just layered with money, but then I got into understanding the industry as I dipped my toes into this, and then I became fully immersed. I got into understanding how the industry really works, how money flows. And then to answer the second part of your question, could you repeat that, please?
Yeah, because I think it's an interesting thing where for somebody like you that you didn't, like you said, you just follow the path. It's like I'm always curious about this on like what your thought process was about the space before you entered it. Like, because if you come in and you're kind of like, I do think all the VCs have money, but at the same time, I want to learn everything. Like, it's funny to know what you think about that because I think every founder listening has some preconceived notions about investors, right? They think every investor has just unlimited cash to hand out.
Yeah.
That their calendar is super busy, but they can still somehow squeeze time in. I'm trying to understand what your perspective is from your own industry where you are now as an investor.
It's interesting because the roles are reversed, and I've always, no matter how much success I have, how long I stay in this industry, humility never escapes me. I always keep, a good stock of humility and humbleness to what I'm doing, because this industry that we're in is can be very volatile, and you can be up 1 minute and just as quickly you can be down. And so it's important to stay humble in the industry that we operate in, and being open and curious, keeping that curiosity bug is, I believe, what makes successful entrepreneurs versus unsuccessful ones, or successful venture capitalists versus unsuccessful ones, in terms of like how kind of like I see the industry and whatnot. I've been a founder. I am a founder, but I've also been a VC. So I sat at both sides of the table, which is given me a dressed up perspective, where I can kind of look at myself on both sides of the mirror, right? And I can look at the industry on both sides of the mirror with an empathetic lens. You know, it's tough being a founder, and you're in a position where you believe in what you're building, and you believe that with the right amount of capital, inject it into the company. If we could just get this amount of capital into the company, then we could be, this everything that we think that we can be, right?
Yeah.
I think that's looking at it from a VC. I understand that mindset as a founder, but founders don't really operate outside of their companies, right? And so they're focused on their company. Whereas a VC, I'm looking at the returns, the impact that how much money is it really going to take to grow this company, and can we keep literally like pouring money into the company every 18 to 24 months to really make this company and keep feeding this company so that it becomes hopefully a unicorn within several years. Is that viable? And most of the times I'm going to say no, because I'm looking at so many different moving parts that most founders aren't looking at, right? And
That
so
makes
most
sense.
founders are like, they're very encompassed by their company, and they're like, if we could just get the cash, but they're very
It's always
subjective.
one more piece. If I just had
Yeah,
one more piece, that would help me. If I had a couple more
yeah,
dollars, I could pay for this thing. It's always one more. And even then, we know that one more isn't
exactly.
really the problem. It's like a lot of founders, it's like an illusion thing. It's almost like founders are under a spell sometimes. Like if I just had one more investment, just one more team member, just one more press release, it would change everything. And I think a lot of founders really delude themselves into a hole sometimes.
Yeah, yeah, very much so.
And so I'd love to hear what you look for in a founder. I'm always curious to hear what you as an investor, what's a green flag? If you see a founder in an event, or if you meet them virtually through outreach, or they're referred to you, what's something that you're looking for that immediately catches your attention?
So one thing that would immediately catch my attention, it's the things that we don't see every day. I mean, how many times have you gone on LinkedIn and seen like a post? Like I seen a post one time of a founder holding a sign, and it said something to the effect of, he was like pretending to be,
Like homeless?
pining for change, but he was,
Oh,
yeah, but he was holding a sign. He was holding a sign to grab attention of people, to grab attention of investors online, is a social media stunt to say like, hey, I will work for VC money, right? It's things like that. I'm not saying pretend, that you're a founder, pretend that you're unsheltered or unhoused or homeless, whatever you want to call it. I'm not saying do that, but I'm saying think outside the box. And most of the pitches that I get are founders telling me how great they are. What I would really like to hear is how not so great you are, and where you've made mistakes, and come to it with a sense of humility. I would like to see where you've made mistakes and what you've learned from that. If that's the first thing that you tell me, instead of telling me how great you are, that catches my attention. And then going into, we're trying to get here. We hit a few setbacks or challenges, but we overcame them, and now we're still going, and we're trying to get here. We're gonna get there, right?
so
I
let me
like to hear
ask,
things like that.
I'm curious. If let's say I'm a founder and this is my third company, I reach out to you and I say, my first two companies have failed, because of this reason and
Mhm.
that reason, but this one worked because of this reason. Is that what you mean by present more of an authentic version of yourself as a founder?
Absolutely. Talk about your failures and what you've learned from them. I had a founder a month or two ago come to me. This gentleman was raising a couple of $1 million, but I had to dig information out of him, right? Come to find out, he had raised about $6 million from a company over 2023 and 2024, right? But that company had not raised money since January 2024. So I'm like, well, have you made your investors whole? Like,
Mm.
how's the company doing? He said, well, we're doing 20K a month in monthly revenue. I said, you're doing 20K a month in monthly revenue. Why are you starting a new company and raising another round for another company?
Like, what are we
the
doing?
the first company hasn't even
You
done a
haven't scaled.
modicum of what you raise, you
Yeah.
know? So, I shouldn't have to dig information like that out, but it seems like so frequently that I do. And so that's not a good sign.
I think that's part of why fundraising is hard for a lot of founders because they don't go
Hmm.
in with that like transparent perspective of if it's
Yeah.
something like that that's going on where the company hasn't scaled, they don't want to be honest and transparent about that. And I don't think founders realize that it sets you back further because you're not being direct. Now, if you came to the
Yes.
investor and were like, hey, we haven't scaled because we need more money to do these things,
Hmm.
that's a more compelling offer versus coming in like, hey, we're raising this amount and give us your money. It just I don't know, it's so aggressive. I think founders should understand what investors want more because that would just make it easier to get the outcomes that you want as a founder versus just focusing on what you want. You got to know what they want
Yeah.
too.
Exactly. Yep.
And what are some red flags that kind of turn you away? If you meet this founder at an event, let's say, let's go with a scenario. You meet a founder at an event and they're trying to tell you about their company in this quick 30 seconds. What's something that makes you immediately go, nope, I'm not interested, walk away, like pie?
Yeah. Obviously, questionable industries like, cannabis, companies that are, I come from the Marine Corps, but I'm interested in defense related companies, but I'm talking about things like cybersecurity, probably not weapons that kill people, right? So things like that, cannabis, gambling, anything, that's questionable there. I'm probably, I would consider it a red flag if the founder goes straight into the money ask without like looking to build a relationship at the very beginning, because that's really what it is. And, we can't get away from the fact that it's a relationship, and, out of the
Yes.
relationship, let's seek for alignment first, not go straight for the throat on the raise, right? Because it's a big turnoff, and it's kind of like, if you're courting a young lady and you don't go straight for, hey, let's go back to the house, like let's go back to the
Right.
room. No, you take her out for a few meals, you get to know her, you look for
Hmm.
alignment, and it's like, I don't think I think maybe a lot of these people have maybe had a lot of difficulty maybe dating because they don't know how to court, you know? So,
Yeah,
yeah.
I think part of the problem there is founders are so eager when they finally get to talk to an investor because it's so hard that they feel like they have to jump in and ask for something to try to close the deal really fast. It's a
Yeah.
certain level of it's a lack of abundance, of fear of scarcity, right? Where it's like if I this is the first investor I've talked to in 3 months since I said I was going to start
Mhm.
fundraising. So I have
Yeah.
to close this deal now. I don't want to lose this investor. And that's where that lack of patience comes from. And I don't think they really look at it from your perspective as an investor to say, okay, well, does he want to be approached this aggressively, this fast? Shouldn't I show these things, these traits of myself, these elements of my company first before jumping
Yes.
into that? It's bad, but I do understand where founders are coming from. It's a desperation they're speaking with. I think that's what it is.
Yeah. Some of the other red flags would be just not understanding venture contracts, not understanding certain language and clauses, and understanding how institutional capital works. Basic terms like, internal rates of returns, DPI, distributions paid in, understanding what a DACA agreement is, or that we can have, yes, we can deploy around to you, but we can also have control over your accounts. Understanding that it's not free money, when you're raising capital,
Man.
understanding how money works, and that, we make an impact first, and then money is a derivative, a byproduct of that, right? It's not we make money first and then we make an impact, so, just talking with people that are talking with value first versus results first, right? And so
Mm,
there's a difference there.
very good
So
way to
those
put
are
it.
kind of yeah, those are kind of just things that I look at, but ultimately really focusing on, you know, how leveraging me as an investor, right? Like, how can we add value before you even talk about money? Because you gotta, if you're a founder, you gotta really see where the investor is gonna add value. They could put 30% of your round in, they could, but the thing is, if they're not adding any muscle behind that money, they're not helping you grow and scale the company, it's pointless. And the thing is that now you've taken up 30% of the round. The likelihood of other, it's going to make it harder for you to raise that round because the other people that they're going to look at the quality of investors that you have on your cap table. And so the other people that
Yes.
could put money in, that could add resources and help you grow and scale the company, um, they're going to want to put that 30% in, but they're not going to put it in because the amount of like, so to put more resources in, like, you have to own more of the company, which means you have to put more money in, right? And so, like, if they can't put a certain amount of money in, that means that they can't provide enough resources and scale or support for to scale the company, which means they'll probably walk from the deal.
I think it's so much that founders have to learn about how to connect with investors. But even in when you get that connection, how to like, I think slow down. Just kind of
Mm-hmm.
slow down and not rush the process
Yep.
of trying to secure that funding. What's your piece of advice to that founder who they've been fundraising for, let's say, 4 months? They're trying to get 1 million. They already have like 250, 750 left to go. And they're like, we got 2 months of runway left. Like, what are you as an investor telling that founder if you could give them some advice? Because that's a lot of my listeners, by the way.
Yeah. Um, for the founders that have been out there in the trenches raising capital for 3 4 months and you've hardly got any bites, I would seriously look at, who's telling you what you want to hear,
Mm,
and then getting rid of those people. That's the
really?
problem, is like, too many of us are listening to people that are telling us what we want to hear, and it makes us feel good, it makes us feel vindicated, you know. But who's telling you what you don't want to hear? If you don't have people around you telling you what you don't want to hear, if it doesn't piss you off, then I think there's a problem. I
That's a
think you
good
need
point.
hard critiques. I think you need to know of when you're soliciting and when you're not, how to build a relationship with an investor, and understanding an investor's world too, that we're getting pitched like all the time. I get like 20 to
Nonstop.
30 pitches every few days, you got to
Nonstop.
understand that, yeah, that we're people too. But you should also know that, like, raising capital just to raise capital is not a strategy. You need a strategy, and you need to understand that, the earlier you do that without leverage, the worse position you're in. So you need to build up leverage within the company, and you need to build up leverage by understanding that there's different investment vehicles and instruments out there. Equity, YC safe, is not the only investment instrument. It's not the first thing you should run to. There's convertible notes. There's my instrument that I created, the reloadable note. There's traditional debt. There's lines of credit. So you need a well-rounded, holistic strategy. In this case, the earth is not flat. Okay, the earth is round. So you need a well-rounded, holistic strategy, especially at the earlier stages, because the most expensive capital that you can raise is equity at the early stages. Build up, maybe take a little bit of debt, not too much. Debt is not the enemy. That's what the industry has taught people, because they
Mm,
want to, because the industry is not founder friendly, and that's why you raise too much capital that the company can't afford, and then several years later it all falls apart because it's really not founder friendly. You keep the cap table as light as possible, raise maybe a little bit of debt, grow and bootstrap the company a little bit longer,
mm.
and get it to, some sort of profitable, and substantiate that future growth vision,
So, are
right?
you
And then
saying
race,
to
and then race.
So it sounds like you're saying that some founders, and correct me if I'm wrong, should
Hmm.
skip this pre-seed phase and go straight to maybe a seed round.
Yeah, not all founders, not all founders, but some of them would be well served to do that. There's some companies that in what they're building, they absolutely have to raise at the pre-seed stage, But that's the majority of companies that I see, they just raise like it's literally like they like straight out of the incubation tube, man. Like they freaking create the company and it's like boom, we got the vision, we got the pitch deck. We don't have any customers, we don't have any pilots. Let's start raising. Like I'm like, man,
Yeah,
that's crazy.
that's rushing it because like you said, I think some founders are underestimating in bootstrapping because you could be one of those
Yeah.
founders who you start doing sales, you do a little bit of marketing, and then it takes off by itself pretty much without funding. I think that is very much possible for a lot of founders, but there's almost a fear that comes with that. I've spoken to some founders here in Seattle who don't want to go that route because they're terrified that if they do get traction in that way, somebody else comes in, takes it over, gets VC back, and they're to the moon. So part of me understands that, but still, I think it's just better to try to sell. I've been in an MLM before, so I've gone door to door selling knives. So like selling does not
Really?
scare me at all. Yeah, I've done the
I used to
worst.
sell vacuum cleaners door to door.
It's like
Yeah.
I call it it's like the rite of passage in entrepreneurship. Like a lot of entrepreneurs have to do that to build your confidence in selling. And as a founder, if you do that, you build their reps in selling, it gets so much easier to
Hmm.
talk to investors. You're not afraid anymore. You have some of the basic knowledge and skills to hold that conversation. Then when you get the knowledge of the actual industry, like the contracts you said, now you can talk to any
Hmm.
investor, even if they're not somebody that you want funding from, just for advice and feedback because you're more qualified for the
100%.
conversation.
Yeah, I mean, I look at a lot of things. I mean, you talk about red flags. I mean, we could really open up Pandora's box of red flags. And, I look at founders that have, advisors on I mean, their pitch deck is littered with advisors. And I'm like, all
What?
right, so these,
Wait, I've
you know,
heard that one. I want to push back on that. I hear that one. I've heard it from like 5 investors now. And this is a question one of my founders put on a TikTok video I posted, which is a good question. If the advisors I have on my team, I don't put them in a pitch deck, do I just talk about them to you? Because how do I show that I have these advisors? I can't put them in the team section on the website, or can
yeah.
I? Like founders are wondering where the advisors go to kind of show that, hey, I have backing from some long-term experts, you know?
Yeah, it's not about putting them in a pitch deck or on the website. It's about what they're doing and how they're remunerated. Like I've seen, people have to out advisors, right? Because they gave up equity on the cap table, but then the advisors are dead weight and they're not doing anything, you know, or if they're an advisor, but they're really just a billboard. So my question is like, to any founders, like, what do these advisors do really? Or are they just a name drop? But no, they should. I would actually advise putting all the advisors in the deck, but it's the ones that have like they're like a pre-seed or a seed company, and they've got like 15 freaking advisors on their deck. I'm like, you're a seed company. Like, what do these people do? Like, you know what I mean? Like, what do they do? So. I mean, you couldn't possibly. I don't even know $100 million companies that have that many advisors. So, sometimes. So, yeah, I think that's important. And, we look at how advisors are compensated and what type of advisors they are. I think board advisors is a segue into board members, but you have to be careful with who you let advise on the company and how they represent the company and what they're obligated to. I mean, like, I've seen advisors on that don't have any set of responsibilities. So, or the responsibilities are very loose, which is can be a liability for the company. So we
Yeah,
look at liabilities and where the risks are in the company and so forth.
that makes
Those are
sense.
all things that I would look at.
Man, this was a really good conversation. I personally learned a lot. I know the founders will love this one. Guys, by the way, tuning in, I appreciate you. If you're watching on YouTube and you got to this point, I 100% appreciate you. Paul, where can founders reach out to you? Can they connect with you? Do you like the DM, cold outreach stuff on LinkedIn, or are you kind of like, leave me alone?
No, I'm very open on LinkedIn. I mean, I connect with people. I've got a wide base of followers, about 29,000 followers. So feel free to reach out. I would say, if you're a founder and you're trying to raise capital, let's build the relationship first. Don't it's it's really a turnoff when like I don't know someone, I've never met them or spoken with them, and the first thing is, hey, we're raising 1.5 million one end. And it's even worse when you put a deadline on it. The round's going to
Oh,
close next week. If you want to end, then at that point I just say, okay, reach out to me when the round closes and let me know how you did. So just reach out. Is a person, I'm a person, you're a person, and let's just build a relationship like you normally would with someone. You can find me on LinkedIn. It's Paul Anthony Claxton. And then also my personal website, which is paulclaxton.io.
Paul, thank you so much for being here, being an amazing guest.
Absolutely. Thank you for having me, Christopher.